it's just so easy to turn a system that is proven to be profitable into a losing one by getting stretched in directions that aren't yours. You're saying that what you love most is not just the money, it's the game. Traders with generally less than 2 years of experience to not take intuitive discretionary style trades. You don't have enough experience for that to be the case. The emotional system has the power to shut down the part of the brain responsible for making decisions, for thinking, for planning, actually taking time to just write out what are your most common trading mistakes. Losing may hurt, but misexecution hurts more. Mapping your pattern becomes your way of getting ahead of that. So you can see the early warning signs.
Hey everyone, welcome back to the Trading Lab Podcast. I'm your host, Richard Moglin. This is brought to you by the Ultimate Trading Guide, which you can pick up your copy down below in the comments for free. Today, our host is the great Jared Tendler, mental game expert, the author of The Mental Game of Trading, and also the lead educator of the Trading Psychology Masterclass that we just put on recently. So Jared, really always great to have you on and chat with you. I always feel like I learned something new, and it's great to have you back.
Thanks, Richard. Yeah, it's great to see you as always. Nice to kind of get the band back together from our masterclass time.
Yeah, for sure. And to start things off, just because a few people watching might not be familiar with you and your background, would you mind giving a brief kind of overview of your expertise, where you come from, and kind of the types of traders that you work with?
Yeah, so I've been coaching for over 18 years now. I'm a licensed therapist, never intended to practice, but I combine my education and training with, interest in sports psychology and created my own program. And all this was kind of born out of my aspirations to play professional golf, which were kind of derailed by my own mental hangups. So in 2005, when I started working with golfers and coaching them, and then eventually met a poker player, and then started working with poker players, and then wrote the mental game of poker 1 and 2 in 2011, 2013. And around the time the second book came out, traders had started picking up the poker book, saying, "Hey, if you just change the word poker to trading, you basically have another book." Not really my style. So in that time, I started working with institutional traders. Was kind of, I mean, some retail traders, but really was almost like I kind of started at the institutional space, and then started working with more retail traders, independent traders thereafter. But I've worked with new traders who are kind of just starting out, but have a strategy already.
Right.
I don't work with anybody has any experience in this game. And then traders kind of getting through prop firm challenges and combines, trying to get funded. Traders who are trading their own money. Clients who've got retirement accounts that they're trying to grow much larger so they can have a nicer retirement. People who are working a second job or making trading their second job, trying to make this a full-time gig. And then very successful independent traders who are making 6, 7, 8 figures a year. Some hedge fund managers, some fund managers as well. So it's kind of a big mix. But my kind of current client base overall right now is a mixture of professional poker players, traders, at the levels I just mentioned. I've got some PGA Tour players and players who are playing professionally. And then I also have some independent entrepreneurs and medical professionals who are, in the spirit of high performance, kind of looking to be their best.
Yeah, very cool. And it was interesting. I just did a podcast earlier this week with a Jay Johnny who mentioned he worked with you, and he's great. He's a fund manager for anybody who doesn't know. And he said working with you has really helped develop his process and refine his rules and refine his mental game. So yeah, very cool. And I kind of wanted to frame this podcast from the point of view of, what's the experience of somebody who starts working with you? What are kind of the first things that you have them do to help improve their mental game, analyze their mental game problems, all of that. So first things first, and I know this is kind of a wide topic, but what are some of the most common issues that people come to you to work through? What are the most common mental game problems that you see, over your wide years of coaching and all that?
Generally not that they're killing it.
Yeah.
I mean, it's the rare trader who comes to me when they're doing really, really well, and they want to make sure that they're going to stay there and continue to grow. That kind of offensive mind is more rare. Most often, traders come to me when they're struggling, which sometimes is not the greatest time to do it, because things can be so bad and so problematic that they're kind of impatient and itchy to get back profitable again, feeling more in sync, and doing better. So, what are the problems that we're dealing with then? Like they're in drawdowns, they're lacking a lot of confidence with their system. They're kind of system hopping a little bit, and on Twitter, in different programs, trying to grasp for something that will kind of work and get them out of it. Then more on a micro basis, they're experiencing a fair amount of hesitation, trying to get into trades that they know are kind of within their purview, within their strategy, but for whatever reason, just kind of can't pull the trigger. There's issues of sizing. They see highly profitable system trades, but after a couple of losses, it becomes more difficult to size appropriately. They're sort of sizing down. Or on the flip side, right? After having a decent couple weeks stretch, now all of a sudden, the risk management parameters start to get a little bit loose. They're sizing a little bit too large, and then when they do take some hits, then it's the kind of re-entry, a little bit of revenge trading. FOMO is obviously a big topic as well. It's so easy in the social media driven world. A lot of traders are in these chat rooms and chat groups, and much like on Trader Line, right, where there's a lot of people who are having success, and there's trade ideas, and there's posting of charts that are of profitable trades, and it's just easy to get kind of sucked in and consumed by that, and to be around that with a more sophisticated mind, to be objective and aware, but without getting kind of pulled too far outside of your own strategy and system, because it's just so easy to turn a system that is proven to be profitable into a losing one by getting stretched in directions that aren't yours. There's a fair amount of greed and overconfidence, but those tend to be harder for traders to see. That's kind of more of a problem I kind of pick up on after we begin working together. But oftentimes it's anger and revenge trading and FOMO and what many traders would believe to be discipline issues, right? The violations of their rules, the entry and exit criteria getting violated. But a lot of times those discipline problems are really just code for emotions driving those violations of discipline, that they're not really aware of those emotions yet. So a lot of times, there's a lack of awareness of what's going on. And it's like that I don't know what I'm doing, I don't know what's wrong, that oftentimes drives them to get help.
Yeah, and I think later on in just a bit, we're going to go through some exercises to help them become more aware and take charge of their emotions. And we've got some free bonus resources for everybody watching, so stick around for that. But first, I want to ask about kind of the first session that you have with traders, and kind of the first few exercises and things you do with them to help start to diagnose the issues, start to bring everything to the fore. How does a first kind of session typically go with a client?
I'm going to frame this as a bit of what I learned from my mistakes early in my career. Having come from the therapy world, again, I came from the performance world, but I was trained a therapist.
Right.
And my coaching style kind of adopted let's sit down first session, tell me what's going on. And it left me in a spot where I was actually in a weakened position, because here I am, in my mind, sort of expected to provide value quickly.
Mm-hmm.
And yet I didn't have the full picture. And what I found was that, 2 to 3 sessions in, a client would say, hey, do you remember when I said X, Y, and Z? And I'd say, actually, no, you didn't say that. And it would have changed a lot of the direction of our work. So what I've now implemented is, when I sit down with a client for the first time, they have already completed a very detailed questionnaire, which is robust. For some people, it can take upwards of an hour to complete, sometimes even 2, depending on how much detail they want to provide. But what that does for me is provide a kind of like overarching lens of what they're dealing with. And
it's like a baseline kind of, right?
It's a baseline, and I can better understand kind of their background and where they're trading and what their mistakes are specifically. And I'll go through and ask questions related to all different aspects of discipline. So focus and procrastination and boredom, or fear and FOMO and fear of loss and risk aversion and overthinking and the sort of the negative stories that we sort of tell ourselves. And then with anger and with greed and with confidence. And what it does is it forces people to in a relaxed environment, right, think deeply about not just the problems that they're experiencing, but often, what is it like when they're at their best? What are their goals? What's really driving them? What do they love about trading? And that kind of reflective time, just hard stop, like, is helpful. I've heard
Yeah.
so many clients have talked about how much benefit they've gotten just from taking the time to really think deeply about, their mentality, their emotional state, all the problems they're experiencing, what their goals are, et cetera. And then for me, I can then also prepare, I take like around 45 minutes to prepare a game plan. So when we, sit down for the first time, I know what follow-up questions I need to ask. I have a rough idea, a game plan, almost kind of like trade ideas, right? I kind of go into the trading session with certain ideas of my areas of interest. And then I'm like looking for, where my entry is. And that's kind of what I'm looking for myself. And it's dramatically sped up sort of the speed with which I can figure out what a client is going through. So, early in my career, I would say, oh, give me 4 to 6 sessions and we'll figure out what's going on.
Right.
Now it's sometimes within 10 to 15 minutes, we've got a very good understanding of the problem. And then it's just about game planning and, kind of refining that game plan.
Yeah, and on that survey, what are some of the most helpful questions for you and for them to try to figure out the areas that they need to work on? Are there a few that come to mind that people out there watching might want to ask themselves and do kind of a shortened version of this survey that can help them figure out and improve their process?
Yeah, it's a good question. I had this open just in case you were going to ask a question like that. So I would say, what are your goals, short term and long term? What do you love about trading? What are you most passionate about? Because when those questions are answered cleanly, like as you get kind of farther down into the assessment on, discipline and, fear, et cetera, where all the other problems lie, sometimes the problem really kind of stems from there being some misalignment with their goals. So, for example, you take a trader who loves the challenge and just the novelty of the markets, and like every day is a unique an intellectual exercise, and there's just this love and passion, and then all of their goals are purely money driven.
Mm.
And that's not wrong, but when we start to look at why there may be more urgency and more of a difficulty handling losses, or some drawdowns, it starts to make a little sense. Like, here you are, you're saying that what you love most is not just the money, it's the game, for the purity of the game. And that's, again, not to say that the money doesn't matter. It just means that it needs to kind of come into more of a balance. And so, like, that would be one example. I think another one is actually taking time to just write out what are your most common trading mistakes. I can't tell you the number of times where that simple question is actually incredibly incomplete. And what I mean by that is that question is early in the survey, early in the questionnaire. And then they're forced to kind of go through and say, all right, well, what are the specific areas of discipline that you're lacking? And then with fear and with FOMO, and then with anger and with greed and with confidence. And as you go through all of those, right, what happens, right? Your mind starts to unpack more and more of the details. So what a lot of traders tend to think are their most common trading mistakes are not really the most common. They're just the ones that spring to mind first. And so there's reasons for that, right? We have inherent biases that exist in the market when we're making particular trades, but we also have biases that are related to our interpretation of the mistakes that we're dealing with. So again, that one is not necessarily one that may be the most illuminating for somebody on their own, but I would sort of force you to write it down, spend some time thinking about it, and then like look at that every day over the next couple of weeks and see if your answer actually matches. And the odds are it's not going to be perfect. The odds are that you're going to use that as an anchor to then start to see other things. And that is really where I think the power in the questionnaire comes out, because when you're forced to write things down, it takes on a different life. For some traders, and this is absolutely true, I can tell in the way that they've written things down. There's no kind of extra verboseness in their language. They're very succinct and very clear. These are people that have been experiencing these problems a lot for a long time. They know them. But a lot of traders have an idea, and they are able to fix some problems, but then others reemerge. And so there's more of a just this like elaboration that goes on, as I can tell that they're trying to figure out what the heck is happening at the same time that they're trying to describe it. So by having you write down what are your most common mistakes, your mind is naturally going to start to elaborate over the next few weeks, and you're going to be able to create some very clear problem statements, which you can then use to start actively solving those problems.
Yeah, I completely agree. And there's such a power in actually writing down ideas, both in, what are you dealing with, what problems you're experiencing, but also a big part of what we teach through Trailline, the master classes, all of that is having a written rule set that defines your system. Because, there's two parts. There's the mental game system, then there's the trading system. Both, they interact a whole bunch, but for both of them, if you don't actually have the system written down and you're just kind of making calls in your head, you're not going to think of every situation. You're going to have a lot more leeway than if you actually develop the system, built that resource for yourself. And of course, it's not going to be a final iteration, but it's a place to start and something to build off of. So, yeah, I'm a huge fan in writing stuff down, journaling each day, kind of as analysis of the market, kind of part of my routine. I do kind of a daily report, quick summary. It doesn't take too long, but it helps me stay in tune with the market so much more. And I completely understand how it can help you be much more in tune with your problems and your experiences as well.
Yeah, I mean the trading side of that is massive. I think it's underestimated, and the simple way that I would sort of test a trader's knowledge of their system is what happens if I wake you up at 3:30 in the morning out of a cold sleep. Can you tell me in 30 to 60 seconds how you make money?
Hmm.
And if you can't, then your system is not internalized deep enough. And you need to go through the exercise of being far more precise in writing out your system than you currently have, and then spending time internalizing it. Because when you have that level of internalization, it doesn't mean that you turn into an algo and you're making just these standard automatic trades. What it means is that you've taken off of your frontal lobe, right? The part of the brain that's responsible for thinking. It doesn't have to think about the basic fundamentals of how you make money anymore. It can now get into the nuances of how to be very precise with your entries, with your scaling, with your exits. And that kind of fine tuning is how very successful traders, navigate trades, right? They can fly a plane without instrumentation because they have got such great sensation, because all of that has been internalized. And writing is a great tool to do that. I think it takes far longer to internalize that when you're, just kind of relying on your memory and, spontaneously what you're thinking about in the moment.
Yeah, and one question I wanted to ask you, and there might not be a great answer for this, and maybe the answer is to work on both at the same time, but in your experience, at what point should a trader um, really start to focus on their mental game? Because they have to build up the fundamentals, like you said, of whatever system they're trading in order to get some type of confidence, some type of thing going in the markets. And mental game issues might just be a result of them not having a fully fledged out system, and there's gaps there. So how would you kind of coach your clients into both developing the mental game system, that side of things, but also you need to work more on your rules and get more uh, dive deeper into your actual process, your actual technical trading ability.
Yeah, I think I can provide some good answers here, because there's right. If you're a new trader, you can work on both, but your mental game work is going to be more personal, or it's
Hmm.
going to be applicable to prior performance environments where, let's say you just know that you hate losing.
Hmm.
Like, the odds are you're going to hate losing in trading.
Yeah.
So get to work on that problem, not in trading, but in those other areas where that is exposed. And then you can kind of get ahead of it, knowing full well that this is going to pop up at some point.
Right.
Right. So but you cannot work on your mental game until, sorry, you can't work on your trading mental game until you have developed a strong enough strategy where you can then be able to sort of distinguish, the mistakes that are occurring from being technical, from being mental. And I do realize that there's a bit of a gray area that can start to emerge, maybe in the like 8 to 12 month time frame,
Yeah.
where you're not sure. But I would default at that stage to having it be more technical, unless you have confirmation that the problems that you're experiencing also occur elsewhere in your life or previously in your life. Then you know that you can again work on both. But then I think for traders that are more experienced and, they are profitable by and large, right? the place that I would spend my time working on my mental game is primarily around where my most common and recurring mistakes are.
Mm.
Because if you've tried through technical means to make corrections, but you still find yourself being sucked in and FOMOing into like this particular type of setup, or if you're a crypto trader, right, and just like there's like ways in which you kind of get sucked in, or during a bear market, right, it's hard for you to not take a lot of those paper cuts,
Right.
So when you have these recurring mistakes that you've tried technical answers, the odds are very high that there's something mental and emotional going on that is compelling you and forcing your hand. And so that's where that you're going to get a lot of value out of spending time mentally. Short of that, then I think we're looking more from a like kind of an A game standpoint and how good can I become standpoint. And that's kind of up to that trader's discretion. I think there is a lot more opportunity for that traders aren't taking advantage of, right? When you can really kind of firmly see yourself as a professional performer, right? An athlete, somebody whose job is not paid based on showing up. It's based on performance. And so what are you doing from a pre-market standpoint, from a post-market standpoint, from how you're constructing your life, to what you're doing during the trading day? Like, there's ways of optimizing your daily process to help you perform better more often and allow you to access real intuition more frequently.
Mm-hmm.
But, again, I think it's easy to kind of get sucked into the day-to-day and sucked into the norm of what traders are typically doing and not aspire to kind of that level of performance, which I understand, not forcing people into doing that. But I think one of the things that I would not caution people on, but it's I think very easy to read a lot of the literature that's out there, even including my book. But if you're not in the place to want to do the work,
Mm-hmm.
then you can start to think that the material is the problem, and maybe trading psychology doesn't have as much to offer as people say it does.
Mm.
But it's the mentality that you're going into it with, right? And so that's why I say, when you have defined outcomes that you want from it, whether it be aspiring towards your A game more and higher performance and more intuition, or whether it's solving distinct problems or getting rid of personal issues that are bleeding into trading, when you have those things very, very clearly defined, then the material is going to help you, because you're just going to keep at it until you solve those problems or achieve the outcomes that you want.
Yeah, that's definitely helpful. And you touched on something, intuition, that I definitely want to come back to, because I think that it's so important and really cool as well. But before that, I wanted to ask you, what kind of characteristics do you find and mindset that you find in traders that over the long term they're successful at working at their mental game problems? Is there a type of a frame of mind that people should come into when approaching these type of things that will help them be more successful as they work through the process?
So first and foremost, a level of openness, and that openness is sometimes, I think, kind of predicated on I don't have the full picture,
Mm.
right? I know what I know, or at least I think I know what I know, but by and large, you probably have at best 80% of the picture.
Hmm.
You've got, it's a 1,000-piece puzzle, you're missing 200 pieces, and that's a lot, and that's not to be critical. It's just to say that when you're in the forest, it's hard to see, all the trees, right? It's hard to see the whole picture, and that's true of myself too, right? I mean, that's why journaling has been such a powerful tool for me, because while I can, share and work with others, it's kind of hard to kind of have that mirror for yourself be as accurate as you want. So we're always going to have our own blind spots. So if you're open-minded, and there's a little bit of humility and understanding that you don't have the full picture, and there's a willingness to work,
Hmm.
right? I mean, even with my one-on-one clients, right, it's just rare that something I'll say or some insight they will have will just snap in place and their problems are solved and we're just going to go on with our lives, right? And that's it. It happens. I mean, don't get me wrong, it happens. But by and large, we're talking more about like getting in the gym and having to work out to build bigger muscles, versus there being some injury that needs to be explored and uncovered. And then suddenly, that strength and capacity just springs to life.
Right.
So more often than not, there's like real work that needs to get done. And yeah, I think by and large, traders tend to want to like wish that these things could be solved quickly and easily, because who wants to spend their time dealing with this crap? Who wants to spend their time talking about mental and emotional stuff? Like, I just want to get in the markets and make money and work on my system, which is far more fun. I didn't get into this game to talk about this stuff.
Right.
And I'll be true, like, neither did I, right? I did not want to be here. I wanted to be playing professional golf. You know, as it turns out, I mean, I know that my life is far more fulfilling being in this spot. Like, golf is a very selfish thing. I mean, you know, being able to help people around the world on a topic that is very well often misunderstood is, I think, a powerful thing to be able to do. So, yeah, it's worked out quite well.
Yeah, it's cool how many different domains it impacts too. There's so many different ways to implement it, and I want to ask from a high level again for maybe people who aren't as familiar with you as they meet as others. From a high level, would you mind kind of talking about the system that you explain in your book and you taught also in the masterclass, just so people can get a frame of mind. And then I think we're going to dive a little bit deeper into mapping emotions and data collection as well, and actually apply it as well, which I think will be helpful for others.
Yeah, yeah. So, I mean, the book lays this system out. The masterclass brings it to life and takes it to another level with a lot of examples. But the system is basically this. There are 4 steps. The first step is to map your pattern. And the general idea is that if you can see your emotions kind of like price action or a chart of a particular symbol, right, that you'd see kind of the rise and fall, right? You'd see where there were areas of support and areas of resistance. And by spending time to be reflective, you can work against one of the fundamental laws of how our brain operates. And the simple sort of way of describing this is the emotional system has the power to shut down the part of the brain responsible for making decisions, for thinking, for planning. And so, of course, when that happens, right, when FOMO rises, when confidence drops, when overconfidence and anger rise, right, that part of the brain shrinks. So you're effectively guaranteed to make poor decisions. Now, how bad they will be depends on how skilled you are as a trader. But for some, it's incredibly bad. For some, it's minor, but still enough of a cut that's worthwhile to work on. But the bottom line is that we can't change that fundamental reality. So if you wait to apply a correction, if you wait to try to control or take command of your emotions at that point, well, the part of the brain responsible for doing that is actually also compromised. So here you are with heightened emotions in a weakened state to defend against them. So the mistakes are somewhat inevitable. Mapping your pattern becomes your way of getting ahead of that. So you can see the early warning signs that a problem is on the horizon. Is it guaranteed? Of course not. But you're in the business of risk probability. So, right, if there is an increasing risk of something bad happening, you know, you're kind of gambling by doing nothing. Mm-hmm. And a lot of you are vulnerable for that because even though you might be able to see it, you have no ability to stop it. So at least by mapping your pattern, you can see this sort of trajectory and you can take action ahead of time. But it's not until we get to steps 2 and 3 that you're really going to be able to have more command. So the second step is called getting to the root of your problem. And we've talked a lot about, you know, these sort of surface level issues, but by and large, they are all symptoms, right? They're all signals of a deeper flaw, illusion, bias, hope, or wish that are actually the real problems. So, right, the illusion of control, hindsight bias, confirmation bias, you know, high expectations, right? These are, or even like wishing that you could make money every day. You know, as crazy as that may be to say, there are many more traders than you would think that have that wish running in the background of their mind, even the wish to be in more control of their emotions, right? Those problems are what are causing the flashes of overconfidence. So you have this illusion of control, which extends to your results. You're having a great run, and all of a sudden you feel like you're in more command of your results than you really are. Things turn, you get angry. The anger is signaling that illusion of control. Now, that's not the only reason for it. And I don't want to pigeonhole this. So there's many flaws. In the book, I talk about 40 of them. And in the masterclass, we've got a long list of them so you can kind of easily reference what they are. And so that's what we're really after. We're going to use a tool that I've created to help you dig down using the data you've gathered to map your pattern to uncover the root flaw. And that is what you were correcting. And so then as we get to step 3, which is creating a real-time strategy, that understanding is what we're bringing into the moment. So you're not defending against this hesitation to get into these positions and like forcing yourself to do it and just saying, all right, just do it, right? Like relax, fire away. We're instead injecting logic. We're taking the correction that we've found through finding the root of the problem. We're injecting it into that moment. So we're saying, let's say with the fear, maybe it's a fear of losing, and the fear of losing is there because losing hurts a lot. And, for some people, losing hurts way more than winning feels good. Mm-hmm. So by hesitating to get in this position, we're really hesitating against like getting punched in the face, right? And of course, anybody who's not in the boxing ring is going to hesitate to get punched in the face because it's going to hurt. But what if the losing doesn't hurt as bad, right? What if you change your perspective on it? And that's what we would be injecting at that moment, would be a new perspective of something. Again, this is not the only one, but something like, I'm strong enough to take this hit, or losing may hurt, but misexecution hurts more. So I'm going to be in pain in one way or the other. I might as well be in pain in this position than in pain on the sidelines. So by injecting that logic into those moments before the emotion gets too big, we can start to change those flaws and biases and wishes and upgrade them. And when you do that regularly, step 4 is just rinsing and repeating, right? Tightening the strategy, building your understanding, making your map more clear, having that real-time strategy get really tight. When you do that again and again and again, over time, you actually resolve those flaws and you upgrade your mentality. And now the situations where you previously would have reacted with FOMO or revenge or overconfidence, your emotions automatically are not reacting. Why? Because they're not the problem, right? They were just signaling the problem. And when the problem's gone, well, then there's no purpose for them anymore. And so the end outcome here is not a robotic numbness. We're not becoming emotionless. Your emotions are actually pure. They're driven more by the passion you have to achieve your goals, but they're not contaminated by this volatility that creates these spikes, right? And that's really what we're trying to do, is using my system to clear out the contamination so you can automatically have more receptivity to the market rather than imprinting your own bias. You can, sort of see things more clearly and objectively. And that's to me is where trading starts to become, much more of the art, and you can, kind of find your best in that.
Yeah, very cool. And I like the allusion to, your emotions going up and down, and we have pivot points in the market where if a stock breaks above that, it's kind of no stopping it, almost up, both to the upside and downside, and letting your emotions reach that level and bursting through that. It's kind of like you're trading without a stop loss in that instance, and it's just kind of keeping going. So
Yeah, good analogy.
yeah, that's great. And would you mind kind of walking us through the process of data collection to kind of talk us through how to gain some awareness about where your emotional levels are?
So yeah, this is a data collection worksheet. And the basic premise is we're trying to, in real time, gather information that is happening around the most common problems that you're having. Or if you find yourself kind of emotionally reacting, but not actually making a mistake yet, well then, that's going to help you collect data as kind of the early signs. So, I have clients that will use this regularly throughout the trading day, just as a way to kind of help keep them more engaged and more emotionally, kind of neutral. Mm-hmm. Because again, writing is helpful. And I have other clients who will just use it like specifically around problems or whatever they notice a problem. But so what we're looking for here is, kind of capturing the situation. So you have some context, the trigger. Okay. So in this example, like, went straight line up and broke out. Once it broke out, turned and came back down into a new area of support. Okay. So now we're going to capture the thoughts. In this case, it was went long, thinking do not want to miss this trade. So it was clearly some FOMO here. Well, what was the emotion, right? What were you sensing and feeling in that moment, right? Some nervousness and anxiousness. What were the behaviors, right? Behaviors and actions sometimes can be a little bit of a Venn diagram. They're overlapping. To me, like behaviors sometimes will include like the actual physical things that you do, or, mentally, the actions might be, the things that you end up, doing in response to all that. Or the behaviors might include kind of physical symptoms like, tension in your head or clenched hands, tightness in your chest as you're breathing.
Tapping your foot, that type of thing.
Tapping your foot. Yeah, exactly. So this is eyes were scanning other markets and chart. Actions, volume was low and started second guessing decision. Probably not a great example of actions, but again, it's another detail here that wasn't captured earlier, which I would actually probably consider more of like along the lines of the thoughts, which is going back to the questionnaire. This is just why it's helpful to have many different prompts, because digging out all the details of your mind and capturing all of it sometimes is not easy the first time you do it. Okay, so then we get to more of like kind of the technical side of things, like, all right, what was the change in decision making? Mine was bouncing from one thing to another. So there clearly wasn't a clear linear decision making process. It was just like your mind was kind of going all over the place. Again, being driven not to miss a trade here. Change of perception, decided strength was not there to go higher, so bailed for a small profit. Okay, the mistake should have been more decisive and went long at lower price, but missed entry, so chased it. Okay, and we can go through another example. Position moves quickly and favorable in my direction. I can't believe I let 5R go. Oh, well, don't want to book a smaller profit. It will turn my way. I'm going to hope it turns out. And you can see how much is wrong in that. But you got to give the person credit for being brutally honest about what's going on. Because unless you have that level of honesty, you're not going to be able to figure out what the underlying flaw is. And clearly hope is a problem, not just in this one particular trade. I can promise you it is showing up in other places that are affecting their execution. Okay, emotions. F it. I'm behind my weekly goal and willing to risk a gain or even take a loss on that gamble that the market will turn in my direction. Fear, anger, and frustration. Are they wrong? That's for them to decide. Okay. I'm not saying at all points you shouldn't say F it and gamble. But if you're not happy with the end outcome of that sequentially over the weeks and months, because you see how much it's actually costing you, then you're going to be motivated to solve it. But I do understand that some traders like that style. So listen, I don't make decisions for you. Right? You want to trade like that, go for it. You want to be like this trader and do something about it, then we keep calling it out. Behaviors, watching every candle paint, scouring socials for confirmation bias, begging the market to give me what I want. Dude, there's so much in there, right? But again, the honesty is awesome. Move stops, look at positions, net P&L. I'm willing to let a winner run to an unplanned loss in hopes that I'll get a miracle. Hoping, not willing to be wrong. Thinking I can predict price action. How could it do this? Shouldn't it go down? Move stops, didn't close in profit. I mean, you get the point here. So, again, you do this kind of day over day, trade over trade throughout the day. All of a sudden, you're going to capture a lot of information that is then going to be useful in creating that map.
And any advice for people when they're first starting out, filling out these worksheets? Is there anything that you often suggest to your clients, whether it's go into more detail, think about, some aspect of it to get more out of this process?
First and foremost, don't get caught up in how many different prompts there are, right? If you can only identify 2 data points, then that's what your starting point is. I think so often people might see this and feel overwhelmed by how much information they could potentially be able to capture. But if that's not immediately accessible to you, then don't worry about it, right? Your knowledge is going to grow over time the more you pay attention to it. It is a skill, right? And don't be worried if this is hard. Just get started. Do a little bit of, each day. The other one would be sometimes it's hard to do it in the moment, and I get that, right? There's a lot going on, and you are compelled. You don't want to, have the data collection worksheet be the reason that you end up missing another trade. So it's fine to do at the end of the day, right? And by and large, you probably will be missing some information because when you capture it in the heat of the moment, right, you're going to get kind of it in its most pure form. But at the end of the day, it's not like it all goes away, right? You're still going to remember what happened, and that's a good starting point as well. So by and large, doing something is better than nothing, and finding a way to make it work for you is the best way to get started. And not making it, not feeling like it has to be perfect is, I think a way to kind of scale down the intensity of it.
Yeah, and nothing worth doing is easy, so do it.
Yeah. And I will say too that I've had clients who've said that just doing this has actually been a great tool to stopping them from making bigger mistakes. Right. Because now, like, one of the challenges of trading is, at least for many traders, right, in the institutional space, right, they had managers, multiple layers of management risk analysts, the risk department who was there kind of surrounding. It was a team effort, right? When you're on your own, okay, so you might be in, private access with TraderLine. You might have, other areas where or other people around you are helping, but they're not responsible for you. So this is a way for you to create almost like kind of the coach for yourself, right? The manager for yourself. Again, because when all of this is kind of in your head, it just is easy for it to take on like an unreal quality, right? It's not kind of tested in reality. When you're forced to write it out or type it out on the computer, it helps you to be more objective. You can kind of see it. It's like staring at you in the face. And again, that doesn't guarantee that's going to stop you because there's more steps to the process or more to the system. But for some traders, like it is a great starting point to help them be more aware in real time and to stop them from doing some dumb things.
Yeah, perfect. So say they've done this, they've collected data for a month, a few weeks here. They've got a good base to go off. How do you take this data and apply it to build, mapping your pattern, mapping the emotions and the levels of emotions?
So think of these individual things as being like puzzle pieces. And so you kind of look at what's listed here. And I think everybody that can see this can clearly distinguish that what happened, April 14th at 9:30, the one on the left, is of lower intensity than what happened on April 18th at 10:54, right? That second example is far more intense. So when we're talking about scaling in a map, right, we're talking about like levels. For me, it's like level 1 to 10, right? 1 being the most basic version of FOMO, greed, anger, etc. 10 being it at its most intense. So you gather up these puzzle pieces and you kind of grade them based on their level of intensity, just, estimating it. And then you begin to kind of put them together into a map. And so I'll give you 2 examples. This is an anger map, okay? And you might see the anger profile. The profile includes other elements that I'll use with the clients, but this is the map, okay? It's this right here. So on a scale of 1 to 10. So level 1 here, right? Irritated by negative P&L or missed opportunity, okay? Level 2, now there begins to, the anger accelerates. There's a little bit of unease in their abdomen. Level 3, feeling the urge to make it up, looking for opportunities to make it up. So now it becomes a little bit more cognitive, a little more cerebral, right? Level 4, I have to make it up and prove that I'm right. So now we get to see a little bit of the flaw in here, right? This confirmation bias. And you can see that this person had also indicated that the point of no return is at level 4, right? If they get to level 5, then they have to get lucky in order for level 10 to not be hit, right? They got to get a win or the market's got to close. So one of those things have to happen, or, they get a phone call and they get pulled away. And this is what happens, right? So having that level of awareness to know that, all right, if I get to level 4, man, I have to not make it up. I have to maintain this level or below, because if I get past that, then I'm gone. Right. So that might be where they take a break, and so that real-time strategy becomes a bit more aggressive, trying to manage that so that they know that the risk calculation is, if I stay here, maybe I might miss opportunities, but I also am going to miss the opportunity to blow up, which is a good kind of,
risk reward tells you to do that.
Exactly. So everything I've described on this side, right? So if we look again at the data collection worksheet, everything up at the top here is all the mental stuff, right? And that's what's being described on this side of the coin. But then on the right side is the technical side, right? And that's more of the change in your decision making, the perception of your market, etc. Okay, so here we go. Focus narrows on one ticker. Focus on smaller time frames. Attention narrows. Market overview is forgotten. Taking lower probability trades. Take quick day trades to make up for negative P&L. Right? You can kind of feel the escalation that's going on here, right? And it's technically articulated so that there's a good overall understanding of what has happened. Okay, and then you can see kind of what that's described like when it gets even more intense. And then here's a fear example of the same thing. So in this example, there's actually a missing level 5 and level 9, which is fine. Many of you who are going to start doing this, if you start with level 1, 5, and 10, great starting point. Okay, or even maybe like it's like 4, 7, and 10. you're not really aware of those early warning signs. You only recognize it when, in this case, they're seeing an increase in commissions and downward sloping P&L over multiple days. Like that's the indication that there's more fear, right? And you don't even see this stuff, and that's fine. I mean, that's very, very normal. That sensitivity is a skill that you'll gain more over time. So yeah, clear escalation is really kind of what we're after in these descriptions, and the data collection. So as you're kind of piecing these together, you might get it wrong at first. And that's why you do a draft, and then you take that draft and you bring it in as points of feedback in real time. I think best thing to do is actually print it out, because sometimes handwriting is a little bit easier. So while you're trading, you might find okay, this like taking a position and immediately start thinking this trade is going to work out. Trade to work out, it will be a loss. Is not the first thing it's like, that's the thing you see, at level 6. Well, it's okay. Well, no, that they're actually, when I have that thought, there isn't a lot of emotion to play. I can, avoid a lot of mistakes. But when I get hyper focused on every tick that goes against me, well, then I know that there's, a greater level of emotion there. And that action, right, that is occurring is evidence of greater emotionality, which means that I'm going to make basic errors in understanding market movement and miss important pieces due to fear, my fear bias. So there becomes causality, right? We can see the predictability that exists here. And again, that's what you do as traders, right? You're constantly trying to find predictability in the markets to find edge. So the opportunity here is to avoid those problems. But in order to be able to do that, you have to have the vision. And that's what these two tools are designed for.
Yeah, and if you can notice that escalation and prevent yourself from taking trades you can't, that's going to help your P&L, and that's an edge in of itself. So, yeah, this is great. And maybe in the next podcast we'll touch more on the next few steps as well. But you can definitely learn about them in the masterclass. And yeah, I think it's definitely valuable for people. And I asked Twitter kind of for some quick fire questions to get from you. So Jared, I'll hit you with them. We'll see how you do in this lightning round here.
All right, rock and roll.
And feel free to take your time if you really like a question. No
Okay.
problem at all. And this one I'm really interested in because it has to do with intuition. So this might not be a quick fire. We can start with quick fire after this. But how can we tell if a gut feeling is intuition or merely just noise? Are there any physical manifestations or thoughts that traders should key in on that helps them identify and separate those two things?
So the quick answer is read my intuition ebook, which is for free on my website. The slightly longer answer is you can actually do data collection and mapping of those two things. So, start to write down the details, right, in a data collection standpoint of what happens when you have real intuition. It will be qualitatively different than when you've got emotion masquerading as it. And by and large, the physical manifestations that I've seen with my clients and the people that I've talked to is that the intuition tends to be like a more calming, less tension-filled experience, whereas the emotion tends to have more agitation, more tension, more, you might be nervous, but there's almost like a knot in your stomach versus like a nervous excitement per se with intuition. Yeah, there are qualitative differences. You just have to start to study them, track them, map them, much like you might map the differences in the emotions you're experiencing.
Great. And this might be a little bit broad, but where does this intuition come from, and where does confidence as well come from? And are those two linked in any way?
Like confidence in your intuition?
Yeah, confidence. Yeah, exactly.
So intuition to me comes from your, like, the bedrock of your knowledge colliding with the markets. And so intuition, like, I would strongly advise traders with generally less than 2 years of experience to not take intuitive discretionary style trades. You don't have enough experience for that to be the case, unless it's something that you've got really do have a ton of knowledge on. You're like really kind of hyper focused in one particular type of setup or one particular symbol. Yeah, you can develop it faster that way. But if you're trading 10 different charts a day, and I mean, it's going to be very, very difficult for that intuition to really start to become accurate or reliable. And so I think like the confidence comes from, the reliable knowledge that your intuition is paying off, right? That there is predictability in what's happening, and there's confidence in your strategy and that bedrock of knowledge that you have. When intuition feels like a stranger, I mean, I wouldn't trust a stranger with my money.
Hmm.
I mean, that's gambling. So you wouldn't trust intuition if intuition is, kind of too unknown for you. So when you can start to feel more of the, or not to feel, but when you have more predictability and can identify when you have real intuition, right, then it becomes a lot easier to kind of bet on it and be confident in it. And it doesn't always mean that it's right, but the probability is probably more in your favor than certainly when there's the emotion masquerading and convincing you to take these trades, and your desire to close this position is not, not just fearful. It's actually intuitive, but you've got to be able to distinguish that, because it can seem similar, right? But when that fear is a signal of intuition, it will be qualitatively different than when fear is a signal of like the fear of losing or the fear of mistakes, or fear of rage when you close that position prematurely.
Great. And this next one kind of comes back to our discussion on writing and how that can help. This is from Jack here. I'd like him to talk about the power of writing our trading plan and thoughts on the market down on paper or typed out, and if that helps us stay on our plan versus just mentally having a plan for each day or week. Also, why it helps us if it does.
Yeah, so I think it goes right back to what I said earlier about, have it internalized so deeply that you can, I can wake you up in the middle of the night and you could say it.
Yep.
And that matters for all the reasons I mentioned there before. I do think that writing it down by and large helps to create a form of feedback, right? When it's not this is not true for everybody. Like, there's enough diversity in the world, but for most people, they learn faster when they talk or when they write versus just when they think.
Right.
So it's simply a matter of getting extra repetitions, because when you say something and then when you write it down, you're getting more repetitions, because then you're also looking at it when you're reading it or you're hearing yourself in your mind. It's real, but the density of it is not quite as thick as what happens in that. So what can you do? I mean, certainly, write down your strategy and stock in the system. But then, day and day over week, right, you might be adding some different, certain setups or what you've learned with particular trades, and, adding examples, and, think about it like you've got a 30-second elevator pitch, have that written down. But then if you're going to go sell your strategy to a hedge fund, right, you have more than 30 seconds. You got 30 seconds, got you in the door. But now you got 30 minutes. What else would you put in that deck to help, sell yourself, right? I would have that now. You're not out there, selling your trading strategy, but you need to have that for yourself. And if you have it, yes, your execution will be more consistent. Like, there's no doubt about it. Or you will more accurately identify where those emotional and mental problems are that need to be fixed.
Right. No, I think that's a great answer. There were a few questions about drawdown. So this one, he was curious about the mental side of being in an equity curve, downswing, basically being in a drawdown or making a new low in your equity curve. So it was at this point, before the rally, and then you make some progress, but then you give it all back on a pullback. So he was just curious about, how that impacts trading psychology and the mental side of trading.
Yeah, I think there's two things. One is accumulated emotion, right? The emotion that can build up day over day and kind of affect your perception, right? Because you're not starting the day kind of clean and truly objective. You're already starting with a amount of emotion already present. So then your perspective is already off, and then there's less emotion that's then going to kind of throw you over the edge. So maybe you're not starting at level 1, you're starting at level 4, right? So mistakes are much more likely. That certainly is a big problem with when you're in a drawdown. The other is that your confidence can be affected, right? And especially those traders who are more, their confidence is measured by P&L.
Right.
They're far more results oriented, which again is not bad. It's provided that it's balanced with your understanding of your execution, your process, and your skill. And so, if your confidence gets weakened, in a drawdown, well, having to work through that excessive results orientation might be the flaw that you got to fix.
Mm,
So I always look at those as opportunities to better understand my C game, right?
mm,
And understand where all my big weaknesses are. And were you to get out of that drawdown, then without fixing those problems, you're not really better off for it, right? I want like the drawdown to be kind of like an upward trending curve, right? Like more like a 200-day moving average that is, positive. There are drawdowns, right? There's setbacks, but the overall trend is progressive
mhm.
versus just kind of going through this roller coaster without actually being able to have your C game progressively get stronger and stronger.
Yeah, and say you're in a drawdown, over the past week, it feels like every trade you've taken turns into a loser. Your system's not working, all that, and you're coming into each day, starting at level 4 on whatever emotion it is. Um, Obviously, it's definitely particular to each trader, but are there some overall exercises or mental processes that you would recommend for people so that they can like reset? Maybe they need to take a break from trading for a bit, but uh to try to get back to level 1 or starting at the beginning, and try to erase this accumulated emotion that's coming from the recent past poor performance.
You might need to do just more journaling about what's going on in your head,
Hmm.
to get more of that emotion out. But in my experience, when you're in a drawdown like that and you are kind of carrying that negativity, that accumulated emotion,
Hmm.
um, it's hard to reset yourself until you start to gain some understanding, right? So I can dump that glass of water out, right? I can get that emotion out of me, but it's going to fill up faster because I still feel a little lost.
Hmm.
But even identifying what my weaknesses are, right? I'm hoping that I can, have this turn around and have it be a winner, right? And so I got to go, well, there's a mistake. I find myself second guessing standard entries. Okay, well, there's a mistake.
Hmm.
And so when you start to kind of better understand what is happening to you in that state and look at it as an opportunity to really define your C game, define your weaknesses, and understand that you are going to have to fix those at some point in time. You don't have to fix them today. Okay. But you're going to have to fix them in order to prevent this type of a drawdown in the future. So when you have that kind of pragmatism and you identify some very clear points of improvement, for some traders, it makes them feel bad because it's like, crap, I got to work on that.
Hmm.
But for a lot of them, it's like, okay, I now know what I'm defending against. Whereas sometimes the drawdown and the emotions, it's like so overwhelming, it feels like just this boogeyman, and you don't know from which way you're getting hit or what's going on. And that is I think a far worse state to be in because there you're lost.
Hmm.
Where you might be struggling and in pain and really not doing well, but you know why. That's
Hmm.
that's fundamentally different.
Yeah. Is it kind of like the baseball equivalent of taking a step back, getting a lot of reps in the batting cage, and watching film of yourself at the plate to try to identify, oh, did I lose the fundamentals in this aspect? All right, I've got to identify. All right, I got to stop swinging at one strike and getting behind the account. Is that kind of a good analogy, or am I off
It
base
could
here?
be. I mean,
Yeah.
I'd say that's probably more on the technical side.
Yep.
Or you might say, well, I'm lunging for this pitch because I'm feeling a little desperation.
Mm,
And so then there's the technical mistake, but I've got to fix the mental side also. So yeah, look, I mean, you might be struggling because the market regime has been tough. We know how difficult this year has been for a lot of traders. There's been pockets of time where it's been easier, but you know maybe there is some imprecision with some of your entries
mm,
that you can kind of nail down. So looking at some back testing and some previous trades and absolutely can help you to kind of feel a sense of, all right, well, when things were going well, this is what it looked like. Here's what things are looking like when they're going badly. And from a technical standpoint, what can you kind of glean from that? Yeah, we go back to the same points from earlier today. Like the technical side, I can't help you with,
hmm.
right? That there's uh, a necessity to have that nailed down to define where the uh, the mental game kind of picks up. Because sometimes you might be really down, right? And when you're down, it's your mind's way of being more introspective and giving you the signal to like look inside, to look at what's going on. A lot of times traders want to go drink and go work out and go eat a ball game and whatever just to get away from it. but that doesn't actually help to problem solve. It may help you to reset, but then you're kind of still dealing with the same problems tomorrow.
Yeah, I think that's good. And kind of a follow up to that is there's a question about holidays, away time, and how that can help with productivity, focus, and your mental game.
I think to keep in mind when we're talking about time off, right? Traders don't want to miss opportunities in the market, right?
Hmm.
But again, you go back to the performer analogy. I mean, if you're not in good mental condition, if your emotions are unstable, then your ability to capitalize on those opportunities is diminished. And certainly if you're burned out, your mind's a little crusty, you are going to struggle. It's a hard stop. Like it's going to be tough for you to be in your A game. So maybe you can calculate, right? What is the difference in your profitability in your A game and your B game? And I can promise you that for some of you, it's large enough that you get paid from taking time off.
Mm.
Right. And there, right, there can be some real value, not just to your trading, but also to the life outside of trading, which then can feed back in. And, you might come back a little rusty, but there will be a sense of resurgence that you'll have when you take that time off. The other thing is when we kind of rely on momentum, especially when we're talking about the internalization of your strategy and system, there's a degree to which you can't harden your skills enough, your knowledge enough when you're just relying on momentum. But when you go away for a week and you come back, you'll get to see very clearly like what has been internalized at a deeper level. And like you see it in athletes all the time, right? Sometimes guy in the driving range just like beating balls, like trying to make something stick with their technique, right? It doesn't work, right? When they'd be better served taking the rest of the day off and coming back and seeing how much actually was internalized. It's happened to me, many, many times. And so, yeah, there is value in rest. And there's also value in rest in smaller ways throughout the trading day, even just a minute.
Mm.
Just take a couple deep breaths, spin around in your chair, just let your mind settle for a second. Right? It'll help with the longevity of your ability to stay at a high level longer, right? And not get sucked in. Because the thing is, as your mind fatigues, you become more vulnerable to those underlying flaws, biases, wishes, illusions, which are going to create more emotional volatility. And you're going to be tired, more emotional, right? It's a recipe for disaster. So, right, being able, especially if you're in a spot where you're just finding it difficult to, kind of keep your stuff, keep yourself together. Maybe a break is the best way forward, right? You're rehabbing from an ankle injury. Okay. Well, being in the gym day after day after day is like good to a point until it starts to wear on you too much. Your muscles don't have a chance to recover.
Right.
So strength is really gained in the rest phase, not in the activity phase. When we're active, we're like ripping muscle fiber, or we're pushing our mind to adopt new patterns and habits, or mentalities, or perspectives, or skills. But it's when we're resting where that consolidation and that strength is built.
Yeah, that's a good analogy. And there's kind of one more follow up that's pretty similar to this that kind of ties in. As we cannot be in a peak mental state day in and day out, so like in your A game, how do we then approach markets in a less than optimal state? So when we're in our B game and when our C game, what would be kind of your advice to this trader?
It's my classic suck less mentality.
Hmm.
Um, because when you can't be at your best, your job is to see how strong you can be. And when you are able to be stronger where you were weak, when you're able to suck less than you previously would suck, you have something to gain. There's something to build on. And that's true with habits, right? So if you tend to overeat, you tend to skip a workout, right? If you can eat, 50 less calories and work out for 2 minutes, there is some gain there. It might be pathetic, it might be minimal, okay? But the reality is there's something, and you can build on something. So, when you're in your B game, to be as solid as you can is a great way of correcting C game,
Mm.
right? When C game is more likely, and the more you can avoid it, you gain a lot when you're able to. And then what that does is create the conditions for your A game, to be easier to attain, right? You can get into your A game more often, and also be able to have it, kind of climb to newer heights.
Yeah, perfect. All right, I'm not sure how lightning fast that lightning fast round was, but I think that was helpful there. And I've just got a few other wrap up questions here, Jared. So, first, kind of other than what we've already covered and talked about, do you have any exercises or reflection questions that you think may help traders who are watching this who want to, improve overall in their mental game. So maybe they go through the process of collecting data. Are there any exercise or reflection questions that can help them consolidate that and help them identify their issues?
Yeah, I mean, I think at the end of every trading day, you could just kind of ask yourself generally, like, what was your performance like today?
Hmm.
And look at it from like an A game, B game, C game standpoint. When I was at my best, what did that look like? When I was at my worst, what did that look like? When I was like kind of more in this average state, what did that look like? And that's just another way of kind of capturing, some of that data, but just on a more kind of macro scale.
Yeah, perfect. And also, it's Black Friday time. Thanksgiving's around. We've currently got your masterclass on sale. They
Beautiful.
can people watching can take advantage of that. The links down below in the description. But what are you kind of most proud of in creating that resource? And well, how do you think it can help traders dive deeper and learn your steps and hopefully make a lot of progress in their mental game?
Yeah, I actually went to the website today just to, take a look at it. And it'd been a little while and saw, that ticker of the testimonials kind of scrolling through. And yeah, I mean, that's what I'm most proud of. I mean, like to see somebody say like this masterclass was amazing or got so much value out of it, or it's like a treasure box that I got the map and landed on the island. And now I just need to, unlock it and fully open it. Like that stuff tells me how much it's impacted people. And yeah, I mean, that's the thing I'm most proud of. So, what's the value, right? The value is if you've read the book or you haven't, but you now have maybe been interested in the system. We walk you through the system in very sequential steps, makes it very easy with a lot of
Examples.
examples and, sort of ancillary questions around it to basically be able for you to develop your mental game strategy. And the beauty of it is that it's packaged in such a way that if you like working through courses, it's very sequential, it's easy to follow, lots of examples. But I think more importantly, it is a resource you can go back to again and again and again because the system doesn't change, right? I work with the same system for the new trader as I work with, the institutional trader who's, trading a book of, 9 figures. The system is a system because of these fundamental rules that we all play by. So as your mental game evolves, as you graduate to new problems or new opportunities, you can go back to the masterclass and just have it guide you through, analyzing, dissecting, and game planning the next problem that you're facing.
Yeah, perfect. And where else can people learn from you? Maybe also point out where they can get the resources, the sheets that we went over today. Where else can people get in touch with you and learn more from you, including the masterclass?
So jaredtendler.com/worksheets. You can get all of the worksheets that we talked about today and more for free on the website. There's also this quick guide for the mental game of trading, right? So if you want to, just sort of kind of handy quick reference for the steps that we've described today, the data collection worksheet is right there. You can see all the anger profile, discipline profile, all the profiles contain the mapping. And then you actually can do an A to C game analysis, which is, kind of what I was just alluding to as well. And yeah, if you're on my website and you want information on the Trading Psychology Masterclass, you can just click right there or go directly to Trader Lion's website and find the masterclass there as well.
Yeah, perfect. And any last words of encouragement or advice for traders looking to improve their mental game, or just a pump up message to end things off here today?
Yeah, I think the reality is that this isn't as hard as it may seem, and just getting started sometimes is the hardest thing. And that's why some of the advice that I gave early on about where those starting points can be for you can make this road a lot easier. But every trader that I've worked with, every person that I've worked with, both in trading elsewhere, if you just get started and begin the work, you will make progress. I mean, it's not possible. Now, how much progress you'll make kind of depends on what knowledge you end up kind of finding and associating with. And that's why, like, I'm not the purveyor of all things trading psychology, but I think when you use my system as the center point, then all the other resources that are out there can help to, you problem solve. And there's a lot of good advice out there. So you just gotta find what works best for you, kind of throw it in the system and yeah, see the kind of progress you can make. It can be, hard at times. But when you see kind of the testimonials and feedback of people on the other side, it's possible. And you just kind of keep at it, one foot over the other. And, much like trading, right? There will become some points where you look back and you realize how far you've come. For some of you, maybe, these moments where there is a distinct transformation, that something is different forever. For others, you may not realize that until you've, kind of look back. But, all of you have the potential of getting there. But the ones that don't get there generally are the ones that just stop trying. And they've decided it's no longer worthwhile. But it's not because there's a lack of resources that are out there. The resources are there, and the solutions are too.
Yeah, keep pushing that interim forward. That's the goal. So
Exactly.
perfect, Jared. It's always a pleasure chatting with you. I always learn something new, and it's a reminder that I don't know a lot of things. So this is great. Always great chatting with you. And we'll have all your links down below, including the masterclass, as well as Jared. You just started the Mental Game of Trading Live. If you want to touch on that now quickly, just
yeah, sure. Yeah, thanks. Yeah, so the Mental Game of Trading Live is really just more of like a coaching platform. So if you want, kind of more ongoing active engagement with me, that's where you can kind of go from that. So it's sort of, coaching and accountability at a fraction of the cost. And there's a bunch of resources on this platform that can help you to develop your mental game strategy. But I'm the one that's, kind of primarily helping to do that work. Yeah, it's always great talking with you, Richard. It's awesome to see what you and Traderline are doing, and congrats on all your success, and wish you continued.
Yeah, perfect. And everybody watching, I hope you guys enjoyed this. Definitely go ahead and check out the resources linked down below, and leave a like down below if you enjoyed this. Subscribe if you haven't already, and we'll see you guys in future videos. Take care.